Kitco News special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.
Hey everyone, I'm Jeremy Szafron. Welcome back to PDAC 2024. Kitco News' coverage here in beautiful Toronto, where it's an interesting day. I mean, gold is sitting around the 2100 mark. There's a lot of talks about silver, breaking through some resistance. And our next guest, Tavi Costa, of course, with Crescat Capital, Macro Strategist, also partner and no stranger to our audience, joining us. Thanks, man.
Thanks for having me.
Thank you for making the time. As I said there, we have so much to talk about. We're sitting here at a pivotal time with gold. We saw a resurgence in 2023, record prices on the spot side, record demand for central banks, almost near record demand, China obviously buying. I watched some of your chat yesterday about the commodities cycle. Of course, it's cyclical. Where are we? What was 2023 and what are we in for this year?
I think it's very clear that we're at the beginning of something, not at the end of one. That you can see those signs in many, many ways. Valuations is one of them. Just look at Newmont being down close to as much as it was back in the global financial crisis is one example. The second one would be just the implied volatility of gold being so suppressed. I've never seen gold making new highs and volatility being so suppressed. Skepticism is also easy to note. A lot of people don't really subscribe to the idea that gold will continue to do well, but clearly that's supported by central bank purchases. To me, if I see central banks selling gold would certainly change my view, but that's not what's going on. And there's room for more. And when you look at the 60-40 portfolios, how much they have allocated, there's a reason why they're called 60-40. They have zero allocation to precious metals and other commodities. And so I think we're entering an inflationary era. A lot of people talk about interest rates being higher for longer. To me, inflation is higher for longer. And as we see that unfolding, ultimately people will start flocking into hard assets. And we're seeing that in gold. And so the fact that we're seeing all this appreciation in price and making new highs so decisively, it is shocking to me. And as the sentiment remains so negative. And so I couldn't be more bullish. Silver to gold rate, gold to silver ratio is about 90. Have you ever seen a time when gold is at all-time highs and the gold to silver ratio is at 90? I mean, this is one of the best opportunities I've seen in my career. So I am crazy focused on creating a roll-up strategy, buying a bunch of miners. I think this is the time to be very busy.
Interesting. Who are you buying right now? I mean, specifically, we talked about evaluations being low, access to capital not coming very easy to a lot of these miners. Who are you looking at, and what's your assessment on, looking at some of these miners, looking at the opportunities in the equities?
A lot to unpack, but I would say that there's a lot of opportunities. The public markets, as I was saying before we start the conversation, are fundamentally broken in the mining space. I mean, there's over 2,000 companies that are public. If you looked at below 100 million market cap, it's almost 80-90% of them. And so there's something going on when it comes to the repricing of the valuation of those assets. And so it's creating an opportunity for people to take those companies private, actually. And so I think that's one thing. The second thing that's happening is even in the private markets, I would say there's a lot of the major companies trying to sell out some of their assets for really cheap prices. Those have a limited time in terms of asset life, but at the same time, I think there's tremendous opportunity for exploration, growth, and creation of more ore reserves, and therefore increasing the production, outline of those companies. And so we've been looking into the private sector quite a lot, and looking to take companies private in different ways. And once the time is right and the public markets get hot again, I think the writing is going to be on the wall. So we can always take companies public one more time. But again, there's great opportunities in the public markets too. I'm not saying that there isn't, but when you see a company trading, drastically below the NAV of those companies in general, it's shocking to me. So I think it's a great opportunity.
Come back to that portfolio value, that 60-40, and why people are not investing in the industry. What do you think that is, and how do we get people to kind of get more educated about the opportunity here?
I think a lot of people try to blame the age group and all those. To me, is just a cyclicality normal in terms of growth versus value. There's so many things that are involved with this. Growth versus value, for instance, I think is playing a big role into this. The declining of interest rates made a lot of companies be able to focus on growth and therefore now focus on profitability. Now, cost of capital is starting to get higher. I mean, it's interesting when you start seeing airline companies announcing dividends and having to do buybacks. All that outside of interest rates being higher also increases cost of equity. Right. And so we're seeing cost of capital in general, which is broadly speaking is equity and debt, are both increasing drastically. And that's going to create the need for companies to focus on bottom line and also profitability. As we see that happening, I would think that with companies, I mean, the miners in the mining industry is probably one of the worst industries to be invested in. I think that view is right for the prior decades. However, there are some periods that you want to own them, and those are usually inflationary eras when hard assets really outpace the price to produce them in terms of cost. And so we haven't seen yet that price increase relative to cost, but we're starting to see some of those things. I mean, look at the relative performance of copper miners versus copper itself. That is starting to rise, and it's a divergence with gold miners relative to gold. And so there are some technical differences there, but I do think that will be a great opportunity here if inflation does stay higher for longer, which is my main view.
Right, and there's so many things happening this year in terms of that macro. I mean, we have an election year in the U.S. Obviously, we were talking about interest rates maybe staying for longer. Market priced in a lot more than is happening. What's your projection? What do you think is the forecast? And are we at the bottom right now?
Bottom for what? Sorry.
Commodities.
For commodities. Yes, I do think commodities are approaching a bottom. By the way, they've been going, if you look at equal weighted commodity index, they've been going sideways for 18 months. I think that we're going to see a major breakout of commodities. And on a year-over-year basis, you're already seeing that actually turn positive, which tends to lead to inflation as well. The inflation signs are starting to, I think 3 months ago, it's a lot harder to make that call that inflation was bottoming, but now it's becoming more evident. I mean, you can see the freight costs globally starting to increase. Food prices are starting to turn with agricultural commodities leading the way to the upside. Immigration happening in the U.S. is a huge deal. What we're seeing with illegal immigration coming in, if you study what happened in the past eras, what we tend to see is increase of shelter costs. And so that's going to lift as well inflation in a big way. And I would be very careful with that. So what I think ultimately happens, tying it up with elections, look, I think there's a risk of a recession, more of a stagflation personally. If that happens, I think the shift of leadership is highly likely because usually during recessions, you see the shift. Trump is probably the biggest candidate there to potentially win. Now, in terms of what changes for commodities, you get a Trump environment would be more friendly for oil companies, more friendly. I think there's the reason why you see that the cost of a call option in oil to go above $100 a barrel today is one of the cheapest we've seen in history. Clearly, the market thinks that that's a potential outcome. My view is that oil or energy costs in general looks really attractive right now. I think 2-3 years is very plausible to see oil above $100 a barrel. Now, if you get Biden administration, it's a completely different environment. You may see, the continuation of the constraints for the producers over time, and that's crazy bullish for commodities. And so deglobalization is playing a trend regardless of who it is in charge. And I think ultimately the reshoring and all those trends that we're seeing, particularly reshoring, more than green revolution, is actually going to start taking more and more place. And the construction of those infrastructures are going to create the demand for base metals, materials in general, and also even precious metals are going to, I think, do very well in that environment. So.
Yeah, it's interesting, with the Fed releasing data. Is it still relevant today? I mean, they kind of go back to their 70s playbook and say, this is what's happening, and we're seeing it. Has anything surprised you?
Oh, a lot of things surprised me, and I would be, it wouldn't be right for me to say that I haven't been surprised with a lot of things. I mean, to say the least, what's happening with AI and the craze with internet. I thought we would be over, and since 2021, that peak levels to me, that was it. And we're now back to those levels. So there's insanity happening, and that's just part of how things are. They're very irrational. In terms of inflation, look, there's, I think some of the things that have surprised people and it's been particularly policymakers and people that don't usually have lived through inflationary eras is how to understand how those trends build on themselves and how they work through waves. And, I've put a lot of work into analyzing how inflation works through waves. It's a base effect, but also mathematical, but also how reflexivity plays a role there too, with the intuition of businesses and consumers. It starts changing on how they behave. And so that's, I'm coming from Brazil. It's certainly, I've seen that throughout my career there. And certainly I think will play a role similarly here in the US and other developed economies that haven't faced that since the 70s. And so today I break down into, a lot of pillars. I mean, the widespread labor strikes that we're seeing, those are not unique things. Though, clearly it's a trend. The deglobalization trend it's also, what's happening in the Red Sea, the wars breaking out. I mean, all those things. I mean, we're seeing conflicts between countries that we haven't seen in centuries. Right. And so they're coming back. And, maybe it's the leverage situation of the world that we have today that causes that. Other things like the chronic underinvestments in natural resources. I mean, how do we do reshoring without making metals and mining a much larger percentage of the overall indices that we have globally? Right. All those things are playing a role here with inflation, the legal immigration. So I can go on and on. So I do think those things are very important. And monetary dilution and reckless fiscal spending. Gosh, I mean. Yeah. Are those, policymakers just have, Inflation Act? I mean, what are we doing? Yeah. That's just not going to fix the problem. It's only going to, so, that's clearly, I would say a lot of policymakers are clueless about how to behave in this environment. And that's what exacerbates those trends.
So what are the risks here? I mean, we're going into, as we mentioned, an election in the U.S. We have trillion-dollar debt every day. It's building. I mean, it's unsustainable. You heard the Fed, Jerome Powell, say that in his 60 Minutes interview, that it's unsustainable path. Yeah. What should they be looking at?
Look, I think there's two sort of scenarios here. One is a depression is highly unlikely because, something like we saw, despite the fact that we have all valuations being so high, why is it unlikely? Because we have a deflationary shock. I think the Fed is just rescues with a new facility that will come in and do something. I mean, we've done this with the junk bonds, investment grade bonds. We already created facilities in the banking side. Yeah. Look at monetary base. It's actually increasing in the middle of what supposedly should be one of the worst QTs we've seen in history. And so nothing like it when you look at the data. And so that's one environment where they keep increasing the inflation trends by diluting capital in general and also diluting fiat currencies overall relative to hard assets. That's one scenario. The second scenario is something like the stagflationary environment we saw in the 70s, in which would be caused by mostly uncontrollable move of inflation caused by maybe deglobalization trends, a war that causes oil prices to spike, and where the Fed has zero control over that, and it's not allowing them to actually prop up the markets as they probably would do in a deflationary shock. That would be a very scary environment. So I pay very close attention to those things because I think that would not change my view, but would certainly add to my opinion in being more bearish. And so stagflation is a real problem.
It's interesting, we've got the S&P, you mentioned AI stocks, tech stocks, they're booming, and we don't really see it coming down anytime soon, possibly a little bit of corrective territory. What's your thoughts on that? I mean, we have a younger generation coming in. They might not necessarily be buying gold, but maybe they're buying Bitcoin. Yeah. Is it mostly narrative at this point, or are people just buying the news?
It's interesting because people think that gold and Bitcoin cannot coexist. And in my opinion, look, gold just increased their market value since October by about $2 trillion. That's twice the size of the market cap of Bitcoin. Right. Everyone talks about how much Bitcoin has been increasing their market cap and it will eclipse gold. But gold just did, just eclipse Bitcoin itself, market cap, just on the increase of value in the last couple months. Right. And so that's one side of it. The second thing is, look, Bitcoin is a lot more correlated to NASDAQ. NASDAQ is being propelled by a lot of the monetary policy we're seeing and the environment that we have in. What do I think will change that whole thing? Look, I think the concentration in markets with large caps is very unsustainable. I don't see that. I mean, the last time we've seen something similar when it comes to the percentage of large cap stocks being part of the indices was actually right before the Great Depression of 1929. Again, I'm not saying we're going to see Great Depression, but I think it's highly likely that small caps in the broader market either can catch up to the upside with those companies reducing their weight, or those companies need to come down. So I think one of the two are going to happen, and it's a spread trade, I would say. But I'm not playing that specifically, more with the miners, being long the miners and being short in the put options of a few technology companies. But I don't think that's sustainable at all.
Right. Let's talk a little bit about the oil and energy sector. I mean, we went through almost a time of narrative where it seemed like the younger generation, everyone wanted green energy, ESG. We're seeing that kind of recalibrate right now. People are realizing, okay, we need oil. It's going to be here for a long time. Is there still an opportunity here? Are we, people can still get involved in that sector and still have healthy returns at these levels?
Look, I think there was a few trends in that environment. Some of them in battery metals have been very strong.
Right.
And lithium was a hot market. I was definitely not touching lithium for a while, and I think there are great opportunities in most base metals overall, given that backdrop you offer. But I would say that even more important than green revolution is still the reshoring, is the revamping of manufacturing capabilities happening globally, given a lot of those developed economies trying to reduce their reliability with China, Russia, and Middle East and other places. I think that's a real trend. It's not only deglobalized, but it's really countries trying to become more independent. It will create incredible opportunities to other countries that have not created great partnerships with the U.S. and Europe. And I think South America will play an important role there. I've been very bullish in Brazil because of that, because I think, as a large commodity producer of many different natural resources, I think Brazil will benefit tremendously from that. Not only Brazil as a leading pack in South America, but the overall region is a region that I think would be a great investment for the future. I've never seen a time when you have a hard assets and commodities doing very well, where emerging markets that are resource-rich economies don't do well either. And there are some political issues and leadership and all those things, but when you think about the overall scheme of how markets tend to prioritize different things at different times, I think they're going to start prioritizing the commodity exposure versus the political risk. And, not that the political risk is going to go away. It's not going to. Right. Remember in the early 2000s, Brazil did I think it had an 18-fold move, and Lula was the president as well. And so, I don't think that's a huge factor here. I think the bigger factor is how cheap those companies are relative to developed economies.
Right. What role will BRICS play in this? I mean, we saw a little bit of talk about AMLO out of Mexico wanting to join. There's obviously an election happening in Mexico this year too, so we're not sure of the outcome of that yet, but there's a lot of momentum behind the movement. Talk to me a little bit about that.
I'm not a big fan of the BRIC idea, because I think that implies that they should be seen as a bloc. Right. And I don't think they are a bloc at all. I think, thinking a little more in depth, I would say that there are separations of different economies that are resource-rich places like Brazil in this case, and then you have India, which is a commodity import in a very different environment. It's a demographic play, not a commodity play. And then you've got China, which is also a commodity importer, that I don't see benefiting as much throughout this decade of hard assets increasing. And then you have Russia, which is a commodity exporter, but a total political mess. Right. And so, who is the winner of all this? I think it's Brazil and India. There's kind of different ways where countries can really generate growth. It's to technological advancements, which is very difficult to see that in emerging markets usually. It's through resources abundance, which Brazil has and some other economies do too. And I would say the third one is population growth, which you're seeing in India. And so those things are important factors. And when I look at China, for instance, I don't see a lot of those things playing along now. The time to be short China and negative in China was maybe 5-7 years ago. Now that we're seeing all this defaults and all those things, those are, there's an old saying that you don't want to invest on things that are in the first page of the Wall Street Journal. You want to invest on the last pages. And that's the first page. Everyone is talking about credit default, defaults. And so the housing market imploding. I'm in agreement. I used to write about China 5 years ago. Now, I think the bazooka is coming in, meaning fiscal stimulus, monetary stimulus. PBOC increased their balance sheet by $850 billion since September. This is, it's a crazy amount. Think about it. And this is just a start in my view. And so I wouldn't bet against it. I'm not short, I'm not long.
Correct.
But I do think it's going to prop up commodities. That's my trade. I think that the dilution of the monetary system in China, because of what happened in the last 5 to 7 years, is going to cause them to increase even more their stimulus. And that's going to be a very important trend for commodities. Will prop up commodity prices in a large way, in my opinion.
Yeah, I mean, we saw China obviously increased central bank buying of gold last year. When you look at 2024, and you're talking to a lot of people in this room, what are you most focused on? Is it interest rates? Is it an election? Is it looking for $2,300 gold?
I'm looking for decisive breakout in gold, which I think it's happening as we speak.
Right.
I am looking for silver assets in a big way. I think silver is the most no-brainer I've seen in my career. There's no such thing as a no-brainer. I don't want to sound this is easy and it's going to happen. No, I don't know. I don't have any edge in terms of that. But I see prices, I look at history, and I've never seen a gold market that is not led by silver. And so silver is my main focus. Yes, I am very focused in finding silver discoveries and silver assets. And so if I can leverage that up in terms of the price leverage, certainly I want to do that. Other things that I think are very important here is energy. I think energy, call options on energy for 2 years out at $100 a barrel. Right. Nobody believes that we're going to see that. I can create 50 scenarios that we're going to see oil prices at $100 a barrel. So no, I like that. I like that type of contrarian opinion. I would say market leadership will shift quite a lot. I think a lot of people thinking we're going to continue to see this leadership with large caps. It's probably not likely. We don't see that throughout history. Now, does that mean the market overall will collapse? It could. But the second way would be that the broad market would actually outperform those companies. And that's also a likelihood. I see opportunities in small cap companies, not just the miners. I think that those are very inefficient right now. I mean, micro caps and small caps are still in a bear market. Yeah. Remember that.
Yeah,
so,
100%.
I like bear markets because certainly that means that things are cheap. And so, so I've been looking at things overall. I try to assess my risk, certainly with large caps and other issues with suppressed credit spreads that we have in the U.S. and junk bonds. I'm a little concerned about those things. But on the other side, it's a tale of two stories. There's definitely things to be buying low and hopefully selling high in the future.
Yeah, definitely a lot of people walking around PDAC looking for some sales right now, for sure. Tavi Costa joining us. Thanks again. I appreciate you coming on. I'm Jeremy Szafron. Thanks for joining us today at PDAC 2024. We'll have more coverage in Toronto, and we'll see you next time.
Kitco News special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.